Welcome to this week's Supply Chain Update, brought to you by Phoenix International. Norfolk Southern Railway is implementing operational shifts that focus on a balanced approach, catering to both shipping requirements and investor interests. They are planning to accept more ocean containers at Midwestern terminals, thereby giving shippers more flexibility. Specifically, terminals in Cincinnati and Columbus will now be open all week, which will significantly ease the logistics for national distribution networks. The Mississippi River is facing dangerously low water levels, impacting U.S. grain exports significantly. The shippers are forced to limit the weight of their cargo to avoid grounding. Consequently, fewer barges can travel the river simultaneously, presenting complications as new grain harvests come to market and as the U.S. competes globally. Rising freight costs due to these limitations make U.S. grains less competitive on the international stage. U.S. imports are expected to decline, as retailers have already stocked up sufficiently for the holiday season. The Global Port Tracker's monthly report suggests that, although cargo volumes will remain relatively stable for the rest of the year, they are likely to fall short of earlier projections. U.S. trucking employment numbers fell in September, although not as sharply as initially expected. Despite the drop, companies are focused on retaining their current workforce rather than hiring new employees. This cautious approach is driven by the unpredictability of freight demands, making it difficult for the industry to make future staffing projections. Import volumes reached a peak of 1.96 million TEUs in August, with the National Retail Federation and Hackett Associates adjusting their forecast to indicate a decline in the coming months. This shift is seen as a sign that the peak for import volumes for the year 2023 has already occurred. The shipping industry in South China and Taiwan has been disrupted due to Typhoon Koryu. Numerous ports had to close. This is the second significant typhoon to hit the region within a month, and it has had a considerable impact on the shipping industry, with a key shipping line reporting interruptions in the operations of around 20 vessels. A severe drought in the Amazon region has adversely affected river transport. A cargo barge was stranded on the Rio Negro River's sandbanks, disrupting the movement of essential goods. The decline in river depths is linked to the El Niño weather pattern, which has caused below-average rainfall volumes in northern Amazon areas, making navigation around Manus increasingly challenging. Recent events near Gaza have disrupted operations at Israel's ports. The port of Ashkelon has suspended ship entries temporarily. This has led to heightened insurance premiums for Israeli maritime shipments and has disrupted supply chains, given that a significant portion of Israel's trade occurs via the sea. A new free trade agreement among the majority of Africa's 55 countries aims to boost the continent's economic outlook. The deal is expected to increase annual exports to $952 billion by 2035, up from $645 billion. Intracontinental trade is also expected to rise, comprising 15% of regional exports. A new free trade agreement, known as the Strategic Economic Cooperation Agreement, has been signed between South Korea and Ecuador. South Korea will remove tariffs on 96.4% of goods, then Ecuador will reciprocate by eliminating tariffs on 92.8% of goods. The ratification of the agreement will follow domestic procedures within the next year. And that concludes our update on the global supply chain. Thank you for joining us. We will continue to monitor these developments and keep you informed. You can follow us on LinkedIn and YouTube for more supply chain related updates.